Alright, let me share one of my all-time favorite trading strategies with you. The reason I love it so much is super simple. Require no prior experience, is completely free to use, and most importantly, it's insanely accurate. I've combined a basic buy-sell indicator with another powerful tool, so even if you're brand new to trading, you can make some serious cash with this strategy. So here's the deal. You can use this strategy on TradingView with any currency pair from crypto or a stocks market. And when I say any pair, I truly mean it. I always get bombarded with questions like, does it work on this? Does it work on that? Trust me, my friend. It works on any pair your heart desires. As for time frames, you can use on any you want. But let me tell you, this strategy is especially killer on the 5-minute and 15-minute time frames. Now let's get down to business. Head on over to the TradingView and open the indicator section at the top of the platform. Click indicators. In search bar, you'll want to type in double EMA pullback. When the results pop up, select the double EMA pullback option and click on it to add it to your chart. As soon as you have it on your chart, you'll notice how it assists you in identifying the most profitable times to buy and sell. So let me tell you all about this incredible indicator that's especially designed to pinpoint those lucrative pullbacks to the EMA lines and gives you the green light to make some serious cash. This bad boy is all about identifying prime opportunities for buying and selling based on those pullbacks. By default, it draws two key lines on your chart, the 200 EMA and the 50 EMA. When the price decides to dance around these lines, the indicator will shut out buy and sell signals. Picture this. If the price is pulling back to the EMA lines from below, the indicator will give you a sell signal. This means the price is likely getting ready to take a dip. So you can swoop in with a short position and make some profits as it drops. On the flip side, if the price is cozying up to the EMA lines from above, the indicator will flash a buy signal. That's your cue that the price could be about to soar. So you can snag a long position and cash in on the climb. But wait, there's more. To make the most out of this indicator and score even more signals on your chart, I've got some killer tricks to share with you. First, hop into the settings window and locate the input section. Find back a step of the pullback option and switch it to 14. This move will make the indicator more sensitive to price changes and generate more signals for you to take advantage of. Go ahead and leave the EMA1 adjustments alone, but let's bump up the EMA2 value up to 100. This will give you a broader view of the market and help you pinpoint those big juicy trends. One last thing, to really make these EMA lines pop up on your chart, I recommend heading over to the style section and customizing the color and thickness. Not only will your chart look snazzy, but it'll be a breeze to spot those pullback and pounce on the opportunities. With these handy adjustments in your back pocket, you'll have a serious edge when it comes to finding profitable buy and sell signals based on EMA line pullbacks. Now let me give you a heads up on identifying the overall trend in market using these EMA lines. If you notice that the EMA 50 is hanging above the EMA 100 and the price candles are chilling above both of them, that's a solid sign that we've got an uptrend going on. This means the market is generally moving upwards, so it's prime time to be on the lookout for some juicy buying opportunities. On the flip side, if the EMA 50 is sitting below the EMA 100 and the price are lurking below both, that's a telltale sign of a downtrend. This indicates that the market is moving downwards, so it's a smart move to keep your eyes peeled for selling opportunities. Remember what I always say, never ever rely solely on one indicator. It's super important to have at least one confirmation indicator in your arsenal to ensure that the signals you're getting are rock solid and not just a result of some funky market conditions. To make this strategy even more powerful, I like to team it up the double EMA pullback indicator with the zero lag MACD enhanced version 1.2. To add this bad boy to your chart, head back to the indicator section and type zero lag MACD enhanced into the search bar. Once you find it, give it a click and add it to your chart. What's cool about the MACD indicator is that it's based on the zero lag EMAs, which helps cut down on lag time and serve up more precise signals. The zero lag MACD enhanced indicator does its magic by comparing the difference between two moving averages, which helps confirm the signals dished out by the double EMA pullback indicator. Okay, let's talk about how we can fine-tune the zero lag MACD enhanced indicator to filter out those low potential signals and get you the most bang for your buck. So we're gonna dive into the indicator settings and tweak a few settings to make this bad boy even more accurate so you can dodge those trades that might not be worth your time. First up, navigate to the input section and the indicator settings. Here's what we're gonna do. Crank the fast MA option up to 45. This little adjustments will make the indicator more responsive to react price changes and will give you faster signals. Next, we'll tweak the slow MA option to 100, which will help smooth out price data over a longer period and make those signals more reliable. Now keep on scoring down the window until you find the glaze option. Go ahead and switch that on. This feature helps to make the data even smoother, so you can spot those signals more easily. While you're at it, disable the rest of the options to keep things focused on the most important info. Moving right along to the Style tab. You're only gonna need the first two options, those columns on the MACD indicator. These guys show you the difference between the fast and the slow moving averages, helping you get a feel for the strength and direction of the trend. To make them stand out, play around with their color and thickness settings. Oh, and don't forget to turn off the rest of the options so your chart stays clean and easy on the eyes. Now let's talk about how to make the most of those sell and buy signals during different market trends. When you spot a sell signal in a downtrend market, your trusty zero lag MACD enhanced indicator is gonna step in to confirm the signals for you. Keep your eyes peeled for those red columns dipping below the zero level on the indicator. That's your cue to jump on that short trade with confidence. And remember, it's always smart to manage your risk by setting a stop loss. You can place it just above the most recent swing high or above one of those EMA lines. For your target, aim for a solid 1.5 times the risk of your trade. And when it comes to entering a buy trade, the process is pretty similar, but we're gonna flip things around. First up, you need to stop an uptrend in the market, and then you're looking for a buy signal. And after that, your trusty zero lag MACD enhanced indicator should confirm the signal with those columns turning white and sitting pretty above the zero level. This is a good sign that the market could keep on climbing. Time to open a long position. Set your stop loss just slightly below the most recent swing low of one of the EMA lines to keep your risk in check. Once again, you're aiming for a target that's 1.5 times the risk of your trade. By using the zero lag MACD indicator, we can effectively filter out low potential signals, especially during sideways markets. It can be tricky to trade because the price doesn't move in a clear direction. Instead, it fluctuates within a narrow range, making it difficult to identify profitable trading opportunities. In this example, you can see how the zero lag MACD indicator helps to filter out these low potential signals. During this choppy market condition, many signals were generated, but the zero lag MACD indicator filtered them out, preventing us from entering trades that were unlikely to be profitable. This is one of the reasons why this strategy is so awesome and effective in any market conditions.